Hi guys, I hope you're good. Let's quickly technically analyze Capitec Bank, and as you guys can see, we are on the monthly chart, and on this particular chart we can see that currently the market has created this very interesting M structure, which has a first leg at that point and a second leg at this level over here. And to add to that, the very same structure has a neckline at that point, right? And as I've said guys in previous videos, that whenever it comes to these M structures, ideally we want to see actually price breaking below that neckline of the M structure, heading back to that M structure to rather the neckline to test it, and at that point is where we would look for potential selling opportunities, right? So I'm just going to add a neckline to that M structure. So we could say more or less that this level over here is the neckline of our M structure. And guys, because the structure actually started at this point, right, where we saw the market push further up, giving us a very nice M structure. Ideally, we want to see the market push further down to around this level to close the structure, right? So what I'm doing right now, guys, is showing you what it is that could possibly happen in as far as Capitec Bank goes. Yeah, so let's continue. So another thing that may possibly also happen is that as much as we have this neckline over here with this M structure, remember that necklines are also very strong levels of support, and we might possibly also see price actually bounce off of this level over here only to push further up, right? Anyway, from here what I'm going to do is head down to the weekly chart. However, before I do so, I just also want to point out that we have this candlestick over here. It is a bearish candlestick with a small body and quite a long lower wick, and what that candlestick tells us, guys, is that there's a lot of liquidity stuck at that level. And as I always say, liquidity is actually money that needs to be triggered by the market, and the market will always go to wherever the money is situated, right? So there is quite a chance that we will see price push at least further down to this level, and not only to test this neckline of this M structure, which is also a very nice, or rather a very strong level of support, but also to grab the liquidity that's sitting in and around that level, right? So at this stage, what I'm saying is buying is not a good idea. Rather wait for the market to reach this level over here and see what it does next. Having said all that, guys, remember that we spoke about how we have this M structure, right? And that ideally we want to see price break into the bottom side of that neckline, heading back to that neckline to test it. And if it does so at this level is where we would look for those potential selling opportunities, and our take profit would be this level over here, which is in line with this one over here, and that's where exactly the formation started. Anyway, so here we are on the weekly chart, guys. So what do we see on the weekly chart that we should be paying attention to? Another thing that I see on the weekly chart that is also very much important is this candlestick over here. It is very much similar to that candlestick that we spoke about on the monthly chart, in the sense that it's also a bearish candlestick with a relatively small body and quite a long lower wick, and it too tells us that there's a lot of money sitting in and around that level at the bottom. Let me just actually mark it out here, right? And just remember that liquidity is money, guys, and this money needs to be triggered by the market at one point or another. So far, guys, we can see that things aren't looking so great in as far as Capitec goes. However, having said that, remember that I also spoke about how we have this level over here, and I said that it's a very strong level of support, and we might potentially see price bounce off this level and actually move further up, right? Anyway, let's continue, guys. So what else do we see, guys? Remember on the monthly chart I spoke about how we have this huge M structure, with this side being the first leg of that M structure and this side being the second leg, right? As much as we have that M structure, can you guys also see that we have another overextended M structure over here, which also has a neckline at that point? Can you guys see that, right? Can you guys see that, right? And remember, guys, I also said that whenever we have these M structures, we want to see price break into the bottom side of that neckline, heading back to the neckline to test it, and at this point is where we would look for those potential selling opportunities, right? So should price from where it is head back to around this level, which is the neckline of this M structure, right? At this point, a lot of people, or rather a lot of traders and investors, will be looking for selling opportunities, and their first take profit would be this point again. And also, depending on what price does at this point, people will be buying or selling, right? I know for sure. In fact, before you continue, let me just add the neckline of that smaller M structure because it's also very much important. And just remember, guys, that necklines are areas and not so much actual lines. So there we go. We could say that more or less that is the neckline of that overextended M structure. There we go. Right. Anyway, as I was saying, guys, right, a lot of traders are actually waiting for price to reach this level, and at this level, they will be looking for potential buying opportunities. Why do I say so? That is because also, guys, as I've said, this level is a very strong level of support, as we've had multiple rejections, and also they are anticipating that the market would give a very nice W structure. Can you guys see that? That's the anticipation in as far as a lot of traders and investors are concerned, right? To add to that, others are actually waiting for the market to close below this neckline over here, which is a neckline of that big M structure that I spoke about. And should price close below this level, they would then wait for the market to head back to the level to test it, and at this point is where they would look for those potential selling opportunities. And as I've said, guys, there's a lot of money sitting at this level in the form of liquidity, right? And we might see the market actually move further down, and that is also because, guys, as I've said, we have this M structure which started at this point, and ideally we want to see the formation end at this point, right? So that is it, guys. And as far as my analysis goes of Capitec, at this point in time, I would not be buying. I'd rather wait for the market to reach this level over here, and once it does so, at that level is where I might potentially look for buying opportunities or even selling opportunities, depending on what the market does at this point, right? But in as far as buying goes to this point, I would not be buying, right? Anyway, I hope that makes sense, and peace out.